from 1776, when we created the Republic, to 1913, the dollar was worth $1. Now, it had a little fluctuation around a depression and a war, Civil War, but $1 is worth $1. There was no such thing as inflation. In 1913, the Fed was created by these wealthy families, J.P. Morgan, John D. Rockefeller, the guys from the Rothschild clan from London. And they created this with the sole purpose of controlling money. Because Baron Rothschild years ago said, I care not who issues the laws. If I issue the money, I am the law.
It's been long established that the central banking system is nothing but a huge scam, one that continuously steals from honest, hard-working people to enrich the not-so-honest elites. The system is the main backer of the fiat money scam, which undoubtedly constitutes the largest, longest, and farthest-reaching financial scam ever perpetuated. It's no surprise that several founding fathers bitterly opposed the notion of a central bank, describing it as an engine for speculation, financial manipulation, and corruption. In a letter sent to Jabez Bowen during his tenure as the 47th Deputy Governor of Rhode Island, George Washington wrote, "Paper money has had the effect in your state that it will ever have to ruin commerce, oppress the honey, and open the door to every species of fraud and injustice." Years later, another founding father, Thomas Jefferson, said, "I sincerely believe that banking establishments are more dangerous than standing armies, and that the principle of spending money to be paid by posterity under the name of funding is but swindling futurity on a large scale." Jefferson also described paper money as the ghost of money that vanishes into thin air and brings nothing but poverty. For John Adams, paper money is the cause of all the perplexities, confusion, and distress in America, and we dare to add, the rest of the world today. These statements were made hundreds of years ago, yet our world is still being terrorized by this utterly corrupt system that takes from the poor to enrich the wealthy and powerful. In a recent interview with Jim Friend, the host of the Advancing Our Church podcast, renowned hedge fund manager Mark Yusko discusses the many failings of the central banking system and how it compares to the truth system of the blockchain. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thank you, and enjoy the video.
There's only one money in the history of the world, really. I mean, there have been multiple attempts, but only one that survived for the last 5,000 years, and that's gold.
Right.
Well, what do I mean by that? Well, money is an asset that exists in the absence of a liability. Everything else that we think of as money are actually currencies. They're backed by debt, government debt. And so dollars, yen, euros, drachma, whatever, drachma went away, now we have the euro. Those are currencies. But gold has been money for a very long time, right? Back to Cleopatra's time, to a suit of armor, to a zoot suit in the 20s, to Savile Row today. You take a single ounce and you get exchange for a fine person suit, because it's been a perfect store of value. And the currencies, the paper currencies, there have been 775 paper currencies in the history of the world, starting in the 1300s in China. 3/4 of them disappeared. They just vanished because governments get so far indebted that the empire eventually crumbles. Roman Empire, Ottoman Empire, British Empire. Now, Britain's still there, the UK's still there, but a single pound note 360 years ago would get you a pound of sterling silver. Today, it would take you 174 pounds of sterling silver to get a pound note. So it's that dilution of value that's preserved in true money. But here's the problem with gold. Let's say I had a bar handy. Now, if I was Kyle Bass, right, everybody knows Kyle, he would literally reach under his desk and he would pull out, he keeps a 26 kilogram Australian gold coin in a safe under his desk. If I had that and I wanted to break it in half and send you half, I'm not strong enough to break it. It's not very divisible. Even if I could break it, I couldn't stuff it in the computer and send it to you. So it's not very functional. Whereas Bitcoin, it has the same scarcity as gold, meaning the amount of new Bitcoin each year that's created is roughly equal to the amount that's lost or stolen. Same with gold. So the scarcity is the same. And that's why scarce assets retain their value. But the divisibility and the portability are better. So I think for the next 5,000 years, Bitcoin becomes. So that's a super, super, super long answer to why do I care about digital assets? Why am I a late in life venture capitalist? Scarcity creates value.
Yeah.
And it's because there's certainty, right? One of the problems with our money, right, the dollar, is this thing called the Federal Reserve, which I always joke is neither federal nor has any reserves.
Nor reserve, right?
It's actually not a bank the way we think of a bank. It's actually a private corporation owned mostly by Europeans, which is kind of weird. So wealthy European families. And it was created in 1913, modeled after the Bank of England, which was modeled after the Dutch National Bank. It was created by a bunch of European families back in the 1600s. And what a central bank can do is they can create money out of thin air. Well, wait a second. Isn't that bad? Like, think about it. If I have a stack of $1 billion over here, and I create a new stack of freshly minted $1 billion, what just happened to the value of my old stack? Well, it got cut in half.
This is exactly where central banks like the US Federal Reserve excel. They debase and dilute the value of fiat currencies until they are basically worthless. A great example of this can be seen in how much value the dollar has lost since the creation of the central bank. According to several sources, including the Federal Reserve, the dollar has lost over 95% of its purchasing power. Today's dollar would be worth less than 4 cents in 1913, the same year the Federal Reserve was created. According to the official CPI inflation calculator, $1 in 1800 is worth about $24.79 today. As you can see from the chart, the dollar's purchasing power has been going downhill since the early 1900s, with no notable periods of recovery like we had in the 1800s. The problem is expected to worsen even more rapidly over the next decade, as the world's reserve currency loses more value thanks to unchecked government borrowing and spending. Let's get back to Mark Yusko's interview.
Thomas Jefferson said it best, right? If you ever let a private enterprise control the issue of money, your grandchildren will wake up penniless on the shores of the land that their grandfathers conquered. And it's true because if you can create something with no effort, at least with gold, you have to mine it. You have to find it. You have to dig for it. You have to mine it. You have to smelt it. Right. With Bitcoin, you have to do something called proof of work, right? You have to buy a machine and you have to tap into the algorithm and you have to pay for electricity and you have to produce effort. And this is one of the most genius things. If you think about all of life, big statement, right? All of life,
right.
It's about converting energy to value. You create a podcast, you fuel your body, right? You fuel your mind, and then you produce value through your effort. If we're supporting our church, right? We're giving our time, our talent, our treasure, okay? We're converting energy to value. Mm-hmm. And everything in life is about that. And so things that go against that are antithetical to true value creation. And one of my hashtags over the past 7-8 years has been get off zero. Okay. Now, what does that mean? It means that zero allocation to Bitcoin and digital assets is the wrong number. When I started down this path in 2013, 14, I didn't really understand it. It's a true story. I got introduced to Bitcoin the same month as the Winklevoss twins. And if you've read the book, Bitcoin Billionaires, which is a great book, Ben Mesrick is a brilliant writer. It's an easy read. You could read it over the weekend. So good. Such a great story. But they're multi-billionaires and I'm not. Why? Well, they got it. They were younger. They didn't have a business that they were tethered to. When I got introduced to it by this good friend of mine, I got the idea, but then when I started doing work and I started writing about it to my clients were like, no, you're an idiot. Go back and do your job. We'll fire you if you talk about magic internet money. And the price went from $500 to $186. This was from March of 2014 to September. I'm like, oh, they were right. 8 weeks later, it was $1,000. I'm like, no, there's something here. What is it? Why does it keep being so resilient? And it would go down, it would come back up, and then it would go down. And every time it was making higher highs and higher lows, and the value of the network was growing. So I started diving deeper into this idea of network effects. And there's this guy named Sarnoff, and he created something called Sarnoff's Law. So when I was growing up in Seattle, I could listen to WGN radio, which is in Chicago, right? Well, how is that possible? Almost 3,000 miles away. How is that possible? Well, they had this giant antenna, and it would beam this magic signal, and it would bounce across the atmosphere, and I could hear it. Well, Sarnoff came up with this rule that said that networks, were equal. The value of a network was equal to the number of people that could hear that signal. So he said it was a linear relationship. If you heard it and I heard it, then it went up 2, and if another person, it was 3, and then 4. Well, then this guy Metcalf came along at MIT and said, well, yeah, okay, that's fine. But what if Jim and Mark talk to each other? What if they form a connection? Well, now it's not a linear relationship. Now it's an exponential relationship. And the difference between linear and exponential, the most powerful example I use is if I take 20 linear steps across the office, I get to the other side. If I take 20 exponential steps, I go around the world twice. It's unbelievable, right?
Interesting.
And so exponential growth of networks.
Like Yusko, popular Bitcoin on-chain analyst Willy believes Bitcoin is getting ready for its explosive growth moment. In a tweet shared a few days ago, Wu noted that Bitcoin is at 4.7% world adoption, the same as the January 1999 adoption level for the internet. The lower curve of the S is just beginning to show, meaning there is so much more exponential growth ahead for the leading cryptocurrency. Wu says this is a sign that we are all still early. In another post he made earlier today, Wu revealed that high net worth individuals are buying more Bitcoin now than at any other point in history. The post reads, "Never has there been such a buying spree by high net worth Bitcoin holders as has happened in the last 2 months, with Bitcoin ranging between $60,000 and $70,000. These are the guys holding between 100 and 1,000 Bitcoin, or roughly $6.5 million to $65 million worth of Bitcoin." In a follow-up tweet, Wu pointed out that this new buying spree is not from the spot Bitcoin ETFs, but from completely different investors. The tweet made in response to a comment on the original post reads, "No, these are not addresses. These are forensically clustered entities. You can also look at the published ETF flows, and you'll see they do not match. ETFs have been in distribution while these guys continue to stack." Please share your thoughts on Mark Yusko's interview and Willy Wu's bombshell revelation about whales accumulating more Bitcoin. What do you think this means for prices as we go deeper into the bull market? Please share your comments and observations in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.